Hey everyone, today's Saturday, the 23rd of April, and I did a video yesterday, I think, yesterday or the day before, mostly on stock markets. I won't talk too much about that. I'll kind of go over the other markets. Some interesting stuff happening. So let's have a look at oil first, because some interesting stuff going on in oil. So I'm looking at the weekly chart here, and you can see it being very bullish. Not much to see in the weekly there, but if you go down to the daily now, I posted an update about a week, 2 weeks ago, where I said that we were looking for a particular move in the market to signal if oil was going to go up or down. And what I noticed was we had this ascending bullish triangle formation, which I don't really usually trade that much. I don't look for them, but I do come across them here and there. And you're basically looking at a move where the market's doing something like this, like that, and then eventually it kind of breaks out from there. And that's what we got. So this, you can see that how we had this sudden push down. This is following the Doha meeting, which is where OPEC meet to decide on production cuts and all that kind of stuff. And obviously, I can't remember what the decision was, but obviously there was a big market reaction on Monday morning, and then followed by a very bullish buying towards the end of the day, which pushed this candle right back up to give us this pin bar. And then following from that one, we just pretty much broke out of this the 41 channel, which is what I was kind of looking for. And then now we're kind of broken above, and we're consolidating kind of in this bullish pattern here. So if you looked at the 4 hour, you can see clearly we're putting in bullish consolidation. So we expect to see, eventually when this plays out, we would see a push to the upside. Now, I haven't got into oil yet, but what I'm looking for at this stage is I'm looking for some kind of pullback. All right, so now we've got the confirmation it's broken out. I'm looking for a retracement. Okay, so more than likely you're going to see another push back up somewhere during the week. What I want to see is some kind of eventual pullback into this level around around here. Okay. And that will be a good opportunity to look for a buying opportunity, right? Because this is how the pattern plays out, and if it does, then you're looking at the next target being around the 47 level, 47 to 50s level. Okay, so that's a good setup there that's playing out. So I'll wait for that one to happen, it could take a few days or a week. Who knows? We'll just have to wait and see. Into the currency markets, because I haven't really talked about that for a while. Now, looking at the weekly, I'm going to start looking at the weeklies more, for you guys anyway. But you can see here we're still hanging around this level here that I've been saying. Like, I've been waiting for some kind of reversal here for quite some time, and it's just been, it's just been pretty adamant on sticking at those levels. But if you look at this, what it's doing now, what the market's doing right now, is it's putting in this pattern that I call kind of a ascending bearish pattern, I guess you can call it, which is when the market kind of does an initial move up and it kind of steps its way like this, and then what it does is it eventually just breaks out, and then once it breaks out, it breaks above this previous top. And then from there it just kind of rolls over, which is what is happening from what I can see here. So now that I've got confirmation that it's reversed at this level, right? It's reversed back into strike. What I'm looking for next is a pullback, right? A pullback doesn't have to be double top, but it has to be at least a 61% fib retracement level. So if we do a retracement, use our retracement tool to do a fib retracement, then you can see I'm looking for price to kind of come in between this area here. Okay, this area here. You can make a case for the 50%, but I prefer to be safe and do the 61. So price comes back up in and around here, then I'll be going down to the lower time frames to look for an entry. All right, based on the best levels basically. So that's that there. So still a fair way away. Now, just to give you kind of a bit of context around this, so the reason why we wait for the retrace is what happens when the market tops out. right? When it tops out and it comes back down, what people tend to do is they either enter at the double top, right? They enter at the top for a short position down. But then there's people that, like me, in this instance, I'm going to play the safer way, which is to wait for confirmation. But then there are people who are kind of sitting on the sidelines, kind of saying yes, no, deciding maybe whether they're going to jump in or not, right? And what happens is eventually there's enough people to push this market down, and it pushes it down, and eventually you see these big candles, these, and at that time, that's where people are starting to say, well, I don't want to miss. This is where the psychology comes into it. This is where people start to say, well, I don't want to miss the move. What if it goes straight down? I don't want to miss the move, So they usually tend to decide around this level here, right? They start to jump in last minute, right? And then that's what gives this big candle push back down, and another candle push back down, right? So a lot of sellers probably would try to get in last minute on Friday. And that's why you get these big pushes. So what happens is, as they're getting in, the smart money, the people who got in over here, right, are looking to sell, right? Because they know what's going to happen. They know that once it gets to this level here, there's going to be some profit taking or whatever. And then these guys, and then as these guys are trying to sell, these other guys, as these guys are trying to, go short into the market, these other guys that bought up here are basically closing their positions. And that's what's eventually going to push this back up, right? So the guys that bought here, right, are going to panic again. They're going to start to see that this goes back up, and then it's going to be panic, and they're going to start to sell because they think, well, what if I'm wrong? What if this keeps going back up? So then they start to close their positions, which is going to push this up even faster, right? So, and that's how it works. That's just pretty much how all these moves work. Okay. So let's just give you some context there. So I prefer to wait for now. Sometimes it will just keep going down. Sometimes it will just, probably 20% of the time it will just keep going down. But most of the time there will be some form of retracement. You can see right here, right? It goes up. This one here goes back down, pulls back up, comes back down, goes back up, pulls back down, pulls back up, and goes back down. It's pretty much pretty much all the time. So if you bought here, for example, you shorted here, goes all the way down, and you still held on to this, eventually it'll go back up, and so you've lost the majority of your profits, right? And then eventually it just, it's almost break even pretty much if you held the whole time. So that's the thing about trading in the futures market and the basically leverage products. So you got to be careful with that. So that's Aussie. The other thing I want to show you too is the pound Aussie, because the pound Aussies, I've said many times, it's very inversely correlated. So, and I usually like to look at the pound Aussie to see if there is actually going to be a reversal or particular, because they all trade opposite directions. But if you go to the daily, you can see clearly already, right? So the Aussie market was down on the daily, the previous chart. You can see here that the pound Aussie was up. So what I expect to see next is the pound Aussie, because it's okay. In the previous chart, I'll show you, bring it up comparison to make it easier. So Aussie USD daily. So you can see how I showed you before. I said, how the market's doing this kind of ascending bearish pattern, right? And then breakout followed by a move back down. The pound Aussie is doing something very similar, but the opposite. Obviously doing a bearish kind of one. It's not exactly the same, right? They're never exactly the same, but you can see here, you can already see it's doing this kind of thing, right? So a lot of people look at the flag patterns, the typical flag and wedge patterns, right? But not many people really look at the ascending bearish patterns, right? Which is something that happens quite a lot in the market. So what I expect to see here is a move back down, right? It's a common move, right? It'll go back down into some particular level, which I won't get into, and then we should see a snap rally back up, all right? So keep an eye on that one. There's some strategies you can formulate around this to minimize risk and maximize reward. So that's that there. What else is there? New Zealand USD is a pretty interesting one because I've been waiting for this pattern to form for quite some time. So if you look at the daily, we've got, I think it was the 4 hour actually. This particular pattern. when it comes up. So we've got a bearish bat pattern, right? That actually it's a bearish Gartley pattern. So we have this bearish Gartley that kind of looks something like this, right? It's X to A to B, B to C, C to D, so around there. So it's basically hit. So you could have entered short right there. Looks like I've missed it, so I'm gonna have to kind of wait for it to kind of do some kind of pull back up, hopefully, and then hopefully get an entry to go short, because this is a good setup, right? So that's New Zealand USD. What else is there? I don't want to go too much currencies. Actually, I might talk about the stock market very quickly. So we've been waiting for this rollover, right? And yesterday and this is, the market does this all the time, but I tend to get tricked as well. So I'll show you what's happened, right? So as of yesterday or the day before, we had this big down move here, which I told you we were kind of waiting. It's a signal, but we want to see follow through. So yesterday I wanted to see a bit more downside to kind of confirm that this is going to be a reversal, right? But what happened was we got this, it closed above the previous close, all right? So it looks like we're going to get a little bit more upside. There is a number that I'm looking at, which is probably the 211s as being probably a final top. Again, we're not too sure, but we'll just have to wait and see. But I wanted to show you on the 1 hour what's going on, because you'll kind of see and understand what's actually. I'll go down low. I'll go down to 15 minute. So, alright. So what happened is, this is the start of the day, I think. Where's the start of the day? Somewhere around here. We started the day somewhere. No, I think it was here. So what happened was, we kind of went sideways for most of the day up until the New York, towards the start of the New York session. Actually, I'll go 5 minutes. A lot better. Right, so we went sideways for most of the time up until about here, where it started to show us signals of famine. Now I didn't see the actual move. What I did was I placed a sell stop around this level here, I think. Basically, sell stop is, if the market heads down, then it triggers that short position, and and that's it. So I got in. Luckily, I was able to get in, and I got some profit out of that. But what happened, as you can see, is we had this big down move and then closed below the previous structure, and then what happened was it started to consolidate. Man. I had a feeling this will happen, but you don't really know until it's too late generally. So, and what happened was we had this up move, and then we had this down move, and then we consolidated, and then pretty much the last hour or 2 hours, it just rallied, right? Rallied, pushed back up. So that's that there. So what that tells me is we're going to see some more upside. So you can see here we've got this. I guess you can make a case for this to be some kind of bullish pattern, but we'll just have to wait and see. So we could see a breakout on Monday or Tuesday or whatever, or we could see more stair stepping to sideways like this. So it's hard to tell at this stage, but it looks like they're going to try and push this up again, right? If you look at the IWM, which is a leading indicator, we had this. It closed on a very bullish candle, right? If you look at the last hour of trading, you can see, it's bullish consolidation, breakout. It looks like another bit of bullish consolidation, and it looks like it's going to break out early on Monday as well. So this market's very distorted. It's nothing really. The fundamentals and the technicals aren't matching. What you see on the chart is what it is, but it's not really reflecting what's really going on at the moment. So interestingly, the Nasdaq was down, right? Actually, the Nasdaq was up for that day, but the thing is, it's compared to the other one. See, all the other markets are up except for the Nasdaq, and the Nasdaq is a leading indicator, right? The Nasdaq and an IWM. But if you look at stocks like Apple, and Facebook and Amazon and those kind of companies, they all got smashed on Thursday and Friday. They were all like a few percent down. Apple was down about 5%, I think. It's been down for 7 days straight. You got Amazon as well. Amazon was down a fair bit. Amazon, gapped down, and this is a kind of a almost you can make a case for it being a bearish signal. Facebook as well. Facebook was down. I think there was Coke as well. Not Coca-Cola, sorry. Basically, a lot of tech companies were down, basically. So, it's going to be interesting because there's still a few more companies that are going to report their earnings this week as well. So, we could see more downside in the Nasdaq. I don't know, but the IWM is the one that kind of gets me a bit because it rallied pretty hard too. So, and it's hard to see where this is really going because it's just constantly getting pushed up. So that's that there. Gold is I think we're going to see a little bit more downside, but you got to remember that this is still bullish, right? Gold and silver are in classic bull patterns. So although you might see some downside reported and stuff like that, it's not really of concern because we're still in a bullish pattern. So we might see some downside down to like the 1190s maybe, or maybe a little bit lower than that. But the bottom line is it's still a bullish pattern. If you look at the overall weekly, chart, this is setting up for a big move to the upside, right? So we're looking at initial targets being at the 1500s, right? But this is same thing with silver. So that's that there. I don't really have anything else to show you. Aussie stock market. Again, we might see still some upside, given that we had some upside towards the close the other day on Friday. But you got to be careful. This is set up. Everything's set up at the moment for a pretty big fall. So I don't understand why people are getting excited that stock market's going up, but it's it's going to crash pretty hard, right? So. And we're not talking about like a 6-month, 12-month crash. This is going to happen pretty quickly within a short space of time. So, yeah. So that's that there. I'll leave it at that. And I think I've gone through what I need to go through. If there's any updates, I'll let you know. Cheers. See ya.